take title on your house. You know, you owe me from that election bet.
Oh boy!
What did you say? I missed that.
I said you still owe me the title on your house. Remember we made that bet when I ran for Board of Governors at the Merc?
Yep. Well, you know what? Now you owe me because the house is underwater, so you got to pay me.
Shit. Taxes are too high up in your guys' hood, man. I'm staying out here in Schaumburg.
Yeah. Don't worry, they'll get you. You're next. Don't
yeah, they're after us.
Yeah, they sure are. After everybody. They're like a pirate. They stand and deliver. They'll turn you upside down.
Hey, Ira, did you get my business card? I left on your desk when I was in your office a couple months back.
You know what? I haven't been up there. I'm in Arizona, so I haven't been there. So.
Oh, this was like 2 or 3 months ago. I was up there.
Yeah.
Some
been
kid I knew
Arizona,
was trading up there, so I stopped by.
Being in Arizona, I'm going to say no. Because I haven't.
Well, it just goes to show us you've always been smarter than all of us. We're up here.
No.
Crap.
Not true. Not true. But we're working on it. What's going on? Oh, Judd, let me get those questions. Oh, shit. Hold on.
I sent you some too, Ira, if you got them.
You sent me something. Let's see.
I copied Judd on them.
Hold on. Let me put my headphones in.
Hey, Judd, I'm going to mute you for a few minutes. I got somebody at the door.
So I got it.
Okay.
I just wanted to say while I was finding that is that I got a couple of private messages asking who the other voice was, and that's Gru. And Gru is you want to talk about Hall of Fame traders that Jack Schwager didn't talk about. He's one of them. Real Hall of Fame.
Hold on one second. Okay. Okay, let me get to what you guys have sent me. All right, I got 5 questions from Judd. Let me see what I got from you. Got it. What are other options other than rate cut? Is that the same thing? Okay, same question. Got it. Okay, what are the options other than rate cuts? Well, they can do QE. We'll go systematically here. But if they go QE, let's step back a minute. They should leave it to the short end because they need to steepen out these yield curves. If they don't steepen out these yield curves, watch what happens to these bank stocks. You're going to look like Europe. And if you want to duplicate Europe and Japan, as far as what the financial system is going to look like, and that's why Lael Brainerd needs to be quiet because her yield curve caps will crush the banks. It will not work. It has never worked. So if you want to just keep pushing the short end down, that makes sense. Now, again, we've discussed this over and over. And, people say, well, you've been saying don't buy the long end. I said, no, I said put on steepeners because I thought rates were going lower. But this should actually steepen out lower and lower if the Fed would just back off here a little bit. I know people are, I look at the Fed funds, that March Fed funds contract. Oh, man, I had a home run. I hit a single. It's unbelievable. I was born on third base, and I've spent my life trying to get back to first base through exiting quickly. But they're predicting another 50 basis point cut right now at the meeting, and I'm not so sure about that. I think Powell has shown that he's willing to cut intermeeting, which is fine. But I think if they go and the markets, I don't lock up with markets. The markets are telling you they're going 50 basis points based on the pricing of the Fed, the March Fed funds contract, which if everybody knows how the Fed futures contract works, we're at 99.13. So it's effectively a 97 basis point Fed funds rate, and that's a 30-day moving average that's worked out when the lead Fed funds contract takes over. So that's where they settle them at over a 30-day period. So there's a substantial cut being priced into this market. So I would be very, very attentive to what that is showing. And here, look at the bank stocks. J.P. Morgan, which was the darling of all, right? How much is it down in the last 4 weeks? Let's see. It's down basically $40 in the last 4 weeks. That's a substantial move. And again, what are you telling me? Is it because the curve has flattened? It hasn't. It's actually steepened, so that you don't have that as an excuse. Their lending margins are being squeezed. Yes, that is in fact true, but their ability to borrow at such ridiculously low cost is also there. So the Fed, if they actually did this right, would move to steepen the curves. And as I said on Tuesday, because we can go back and replay that after they cut, it had a two-pronged attack. It was an attack on that they wanted to get the dollar lower, and I think that's absolutely right. And it was to steepen the curve, and we got that move too. But now the curves are recovered a little bit as now people think, well, this economy is going to slow. So now everybody is basically, they won't say it, but they're talking about a demand shock. Forget the supply shock. Because if it was a supply shock, prices would go higher, and the curve would steepen based on that because there'd be some inflation in the system. It would be short-lived, but wow, you know what? As again, you have to be out of your friggin' mind to buy a 10-year U.S. Treasury today that yields 65 basis points. And of course, we're talking at the extreme levels of today, but at 65 basis points, really, when they're telling you, and I think this is going to become very critical. You can't just look at it through going, well, what can they do? Can they do QE? It would have to be how they would do QE. And right now, they're not like the Europeans or the Japanese, where they are prevented under, I think it's Section 13A of the Federal Exchange Act. Somebody could Google it and verify it as to what they can actually buy. Because even when they stepped in and started buying AIG paper and some other things in 2008, Paul Volcker warned them that they were really treading on thin ice. And I think it's because of Section 13A of the Federal Reserve Act. I'm not pulling it up. I got too much else open and I'm not going to look at it. But so that QE question is, what are they going to buy? And if I was them, I'd only buy everything on the short end. But of course, that's also wreaking havoc. There's no free lunch because it wreaks havoc in the repo market, because there are a lot of people who do not want to surrender their T-bills that they own. Hey, I basically moved everything that I moved out of stocks. I moved into 6-month Treasury bills and was, able to get 1.5% 2 weeks ago. So the movements now are really crazy, and people don't want to give them up one way or another. They've had same thing with the farther out, with some of the coupons, because anything that now comes to auction on the 5s, 10s, 30s are going to have coupons because they're going to come at rates that are going to be extremely low. So people who need cash flows are going to be not likely to surrender their higher yielding notes to replace them. Now, Judd, I think somebody asked a question. What's happening in the market, of course, and the banks are trying to get ahead of this, but you're going to have a massive amount of refinancing in the markets. As hey, listen, everybody I know, I'm telling them, I just refinanced this week. It's been in process, yeah, and I'm not going to go back and do it. I'm 60. I'll be 67 years old. I'll probably be dead by then anyway. But if you're in your 30s or 40s, especially 20s, 50s, you better be refinancing. I had this conversation with my son-in-law this morning, and they just did their mortgage, but and he told me what they were making them, 3.2, after he just had a mortgage done for 3.6. I said, hold on another 3 weeks, because these will be down. You'll probably see mortgage rates down to 2.5%. So then they become significant, but that results in what's called convexity. Thank God I had a teacher like Fred Arditi who taught me about it. Wait
a minute, is that 2.5 on a 30-year?
Yeah, I'll bet a 2.8 on a 30, and I'll bet it's 2.5. I've already heard somebody got a 2.7 on a 15-year.
Because I got to advise my son-in-law on this right now.
I've got 275 on a year fixed last.
Yeah.
Okay.
Yeah.
Thanks.
But pay attention here. Now, again, Jay Powell screwed this up because when he was asked that question by the CNBC reporter at the press conference on Tuesday, and she directly asked him, well, if things improve, are you going to pull it back? And he wouldn't answer it. And that's the way that this should have been done. But, of course, their timing, as I've maintained, and everybody who listens in here will verify that it should have been done weeks ago, because it was an economic crisis, not a financial crisis. The financial crisis was going to follow at some time. Now people are really concerned about a financial crisis, not the economic crisis that there's, and you see it in the credit markets. So we will be patient here with this, but the Fed has a lot of work ahead of them. And I wish all these other idiots at the Fed would stop talking, because all they've been is wrong for the last 3 weeks anyway. Because they all said, no, we don't have to do anything. No, we don't have to do anything. And yes, I'm a big believer that when the facts change, you change. But if you said less, you wouldn't have to backtrack all the time, and you wouldn't look ridiculous. Why don't you just keep your mouth shut and let some things start to unravel rather than having your predictive abilities be so questioned. So that's my statement about that. I think these curves are of paramount importance here. So what the Fed will do if they embark upon QE, they're not going to be in a hurry. I was actually locking up with Mike Temple, who, if you guys follow the blog, writes some great stuff in it. He's been really right. But I don't think we're going to see as dynamic a move right now on everything that I see from the Fed. I think the Fed has to be a little cautious here because, again, that unemployment number was crazy, and the fact that they revised the previous one. Now, a lot of that is up, fairly substantially, but a lot of that has to do, of course, with weather, because you see the construction numbers and some of the manufacturing jobs came back. The Fed did the 50 basis points, but, and again, they could go dramatically because, again, I think this is as much about the dollar as anything, and I've been very adamant about that. And you know what? And we've seen a very substantial move in the dollar in the last 3 days. We saw 1 day down when the equity markets were up, but it's the best, it's the best trading I've done in ages, because I actually did that dollar trade with the euro of all things. So, and I thought last night's blog laid out as to why, but we had actually talked about it in this room a few days ago, which is usually what happens. I have to mull through some of it. So whoever asked that QE question, and will it work? I don't know. It'll work if you tell me if they were actually honest about what they were trying to achieve. If you keep moving the goalposts, everything works, as long as you're defining what the outcomes are. Well, this is what I was looking for. This is what I was looking for. As Steve Leisman, who's one of the greatest apologists for the Fed I've ever It's my problem with him. Not that he's not a smart guy and doesn't do some really good work, but he's always an apologist for the Fed. You know what? I don't make apologies for anybody, but when they always come up with, counterfactuals, well, if we had not done this, what would have been the outcome? If we have, that's a great fallback position for all policymakers. Well, if we hadn't done that, the outcomes would have been worse. How do you know? How do you know? So that's my soapbox issue for the day.
Yeah, it's interesting where the euro just stopped too.
Yeah, well, it's up at that 200-week moving average, which I thought was kind of interesting this morning. That but at the same time, and I go back to that S&P bond spread. Oh man, and Judd, you asked it right at the right time, getting down at that 1635 area, which was the breakout of October 2017, which we discussed in real time.
Yeah.
So that was an interesting test. Now, I don't know that it's going to hold because the bond markets are just crazed, but there's going to, in that craziness coming for the next 3-4 weeks, there's going to be nothing but opportunities if you're prepared and see this in the entirety of the big picture. And again, if the move is to impact the dollar, which is my thesis, and right now it is correct, but I say right now because things will certainly change. It's not like things are great in Europe. In fact, the European sovereign debt markets are absolutely going insane when you really look to see what's taking place there. We've seen everybody's coming for the bunds because they need bunds for collateral, and there's a shortage of bunds. And of course, the Germans are out there saying, well, we don't really need to do a fiscal stimulus. We don't have to open up. So the bunds are performing the best of all, and we've seen back up in French rates, Spanish rates, Italian rates. I mean, nothing of consequence. It's still ridiculous, but we have seen that. So, and everybody, I listen to people say, well, and that was good. Santelli did a good hit yesterday with Vince Reinhardt. And he talked to Reinhardt about that. And I disagree. I would vehemently disagree that the other banks are going to move. I would laugh hysterically if Christine Lagarde actually brought rates back to zero in the face of this, because the rates mean nothing. They mean nothing. All they're doing is hurting the financial institutions. So if you're really concerned about equity markets, you should be trying to steepen these curves dramatically to try to aid and abet your financial institutions to at least get that segment of the market working. But, right now, as we look at bank stocks, the movements have been, to quote the Seinfeld line, breathtaking. And that's not in any attractive way, by the way. It's breathtaking, but remember how ugly that baby was. So the markets are breathtaking. I'm very cautious here. That's very cautious because I think a lot of these guys have it wrong, and I think that the U.S. told the world that we want a lower dollar, and the lower dollar is actually good for the world. The unfortunate thing right now is that it's not helping the emerging markets. I mean, the ruble's under pressure, the peso is under pressure, so they're not getting that fallout yet. The dollar to cover those funding costs are still going up, while commodity prices are still dropping. And that's been the problem. Here, let's put up the Bloomberg Commodity Index. Yep, we're really down in the sewer. And if this is what they're reacting to, they will keep the pressure on. But again, if they're successful, and this is me defining what I deem as successful, is that the dollar goes down and the U.S. curve steepens. That would be successful because that will, I think, move to eventually stabilize the equity market. Right now, everybody's just too nervous. You know, you get some people come looking for bargains, but overall the market is just nervous. As rightfully so, they should be nervous.
Yeah, I mean, the oil just got huge stops this morning on the annual and the quarterlies.
Okay, I'm going to jump to the second question, and I have no answer for that because I don't know about platinum usage in the fuel cells. Now, the platinum was up this morning because Anglo American, I think, declared force majeure and closed some mines. So platinum did get a bid based on that. I don't know what more to make of it than that. So I can't answer that question. It's a good question. You know, if Mike is on, he seems to have a pretty deep knowledge of the fuel cells. As much as I know about him, he seems to know more than I do. So the chemical nature of how it converts, whether platinum is used or not, I don't know. I can't answer that.
Well, he's in. So, Mike, if you
Okay.
want, go ahead. Okay. Well, he's being a voyeur. So.
Okay. All right. It's okay. Now, number 3, I'm going right down the list. What assets are the Swiss Central Bank buying and selling? We don't know, but we did see numbers from Switzerland this morning. Let me go retrieve those. Pretty straightforward. Comes from the I know I had those. Oh, IMF special data dissemination. Here it is. Okay, so we know in the first, this is for January, Swiss holdings increased. Let me see their net balance sheet. I got to go through this. I think it was up 5 billion, I believe. So they increased 5 billion, but let me make sure of that. Yep, they were up about 5 billion. So we don't know. We don't know what they're selling. We don't know. It's too early, and you can see we're just getting January's data. So what took place in February, we don't know yet. But with the Swiss franc, see, and it's okay. They're not unhappy right now because Euro Swiss is still, while it's sitting on, I'm going to pull up that chart, the Euro Swiss. So we're talking, while it's sitting on, you know, multi-year lows here down at 106, basically, it's not going crazy, and the Euros had got a little bid this week, so they don't have to be as dramatic in their actions, but they will be involved in these markets because it's just what they have to do. They can't. They've told us they will not let this go, but they have to be careful because there's only so much fighting you can do, so you have to choose your moment. Because if the market, for some reason, wants to keep buying Swiss francs, no matter what they do with their printing press, you just have to be respectful of it and look for your moments. Again, as I said, from the dark recesses of my mind, that if I was running the Swiss Central Bank, I'd be loading up on silver and just storing it, because what's the difference? They have all the ability in the world to do that, to be another part of their hard assets, but they're evidently not seeking or taking my advice, although we did get a little bit, but nothing like in the gold. So it's so marginal.
Somebody was on Bloomberg this morning, Ira, saying that they were looking for parity in Euro Swiss. I don't know who that was.
Well, yeah, that could be. I mean, we've been through there. We were down to 85 during the January 15th, 2015, when they pulled the plug on it. So yeah, well, you could look for parity. Why not? You know what? That's the concept of the haven trade. And now we know the dollar the dollar was a haven for 2-3 weeks. But if the Fed really wants to bash it, where are you going? So I guess in that regard, the Swiss, yeah, why not? But let's watch the euro here. You know, and a lot of people are doing, as Mike Temple told me, you know, I saw that chart that Stephanie Pomboy, who I respect, she's actually a pretty good analyst, on the differential between the Bund and the 10-year note broke down below 160 basis points, which seemed to put a bid to the euro. Let's see what it is this morning. Yeah, we're about 140. So it's been a substantial move this week, and it's been the lowest differential. But okay, and again, if I was Lagarde, what difference does it make? I would raise rates, especially if the U.S. wanted them to create a situation where they were putting some downward pressure on the dollar, if they prevailed upon them. And Lagarde would be, you know, coming out of the IMF, she's very aware of where some of these landmines are in the debt market. I mean, we haven't talked about Argentina, and Argentina is struggling mightily here. That's just one more thing. And then you watch, you know, we haven't talked about what's going on between Russia and Turkey this week. And now we have, you know, Russia and Saudi Arabia supposedly at odds at the OPEC meeting. I will tell you this from all my experience. When the miscreants of the global system see vulnerabilities, they get busy. Because you know what? One thing we know about Russia, when the world's attention is turned elsewhere, they do some funny things. Like when they invaded Georgia, not Georgia, United States, but Georgia, Central Europe, Central Asia. It was during the Olympics. When they went into Crimea, it was during the Winter Olympics in Sochi. So they have a tendency to really move when the world is focused elsewhere. So be aware of that, because strange things take place when the world's attention is diverted. That is a pattern that they have portrayed, and they're not the only ones. Erdogan too. So let's see what comes out of whatever has happened in that area of the world. Somebody said to me, asked me this morning about what could get what could get Russia and the Saudis, or what could get the Russians to capitulate to OPEC. I said probably Erdogan's head on a spike would do it, but they didn't find that funny. But I'm not sure I was trying to be funny. Number 4, I'm going right down the list. Since the Fed 50 had no positive result, how do we know it didn't have a positive result? You must be talking about equity markets. But if it had a positive result and they wanted to steepen the curves and get the dollar lower, then they had a lot of a result. The results have absolutely been positive. So if you're only talking about equity markets, you got to define yourself. Because if I sit and listen to the CNBC crowd, yeah, this is why would you even do it? Why would you bother doing it? It's ridiculous. But if your goal was, if the outcome you saw was to try to get the dollar lower and to get the curves to steepen, you've had a lot of success. The equity markets are the equity markets. And you know what? I wish they would stop concentrating on them and just do what was needed to be done. And I still say that had they moved 3 weeks ago, they may have been in a better position, because they could have said why they were doing it and announced that they were ready to pull it back at any time once things settled down, because it was, again, an economic crisis, not a financial crisis. Now they've actually scared the world, because there are people who think that there are some bonds that are really starting to seize up, and they're worried about some, and will they have to buy, you know, so well, that's just my view. So when you say it's not a success, you have to define what outcomes you were looking for. And now we'll get to the simple one. What about the DAX? Game over? I don't know. I guess from a technical standpoint, the DAX really looks pathetically weak, which it is, but it reflects more about Europe. But I'll also tell you something. Europe is really interesting because whenever we have seen moves, and you, Judd, you could put this up, on the differential between Bunds and Italians and Bunds and French, and everybody was coming for the Bunds, and we're here at, I think, well, I don't know if we're at record lows, but we're close here at 73 basis points negative. We were a little bit lower at its height. But when we've seen this, what's happened, and this is, take this to heart because this is a part of the dollar scenario. When we saw the Bund being in favor and all the other sovereigns being out of favor, like we're seeing right now, on a momentary basis, the euro got sold off because it was deemed to be that there were problems in euro land. Interesting that the euro is not selling off in the face of this. So again, one more thing to pay attention to, and I am being very attentive to it. But as far as the DAX, again, those financials can't get out of their way. The European bank stocks, what's that index? The European.
Yes, BH20.
Yeah, what does that look like? I didn't even look at
Cliff, it's trading at 7.5. So that's basically the August 19 lows.
Yeah, and look at Deutsche Bank was trying to start to make a move. I think what we get up to $11.
Yeah.
Yeah, that was very short-lived. Now it's back, and it hasn't made new lows, so it's worth watching. But I don't know. The DAX. I think there's a lot of it will be dependent upon what comes out of Europe. And I don't know, talk about Brexit. So, but these idiots, they keep talking about Brexit. Right now, that's not an issue. You'll work that out. You'll make your agreements, but I wouldn't keep that front and center. There's many other things that you should put on your plate. But I would watch Lagarde here very closely. And it's interesting on that Japanese October 14th, 2012 blog I reposted last night.
Yeah. I
can't believe I had so much positive to say about Lagarde at that time. Well, no, I'm serious. I was, I call it the way I see it, and
yeah,
but,
and still, she's still in a box, so this will be interesting how they think they can get out of it.
Yep. Yeah, no, it is a very good point, Judd. It is interesting, but I think she has a way out. I truly do, and she's got negotiated. That's why she was not in a hurry to join the rate cut. What would have gotten her? Nothing. She would have. There's only one thing that would have come out of that. She would have pissed the Germans off. And you know what? She's got to live with the Germans. And it is no time to be pissing them off because the politics in Germany right now are very difficult. Very difficult. They're trying to, to right the ship by getting some more conservative people from the CDU in. But this is a very difficult time. You have the rise of the AfD again, and you almost got inundated with another refugee crisis. You're not there yet, but Erdogan knew what buttons to push just in case nobody's paying attention. He got their attention very quickly when he was going to, okay, open it, send them out, go ahead, Europe. Can you imagine it taking place with the virus being spread now?
Oh, and that's his response to them not standing up on the NATO.
Yeah, well, that one is going to become. I've warned about that. Article 5 of NATO. Is NATO going to come to rescue the Turks if the Russians and them actually go to an all-out battle?
Well, I don't see.
And believe me, Putin knows how to irritate every. He is the classic disruptor. He loves this. He loves this. This elevates him in a big way. That's why he's playing the oil card. Okay, I'll absorb it. I'll absorb this hit.
He's got to play
First of
from
all,
a
he's
weak. He's got to play from a weak hand. Really, he has to be very sly, very strategic.
Yes, that's right. It's like in Cool Hand Luke. Sometimes nothing is a pretty good hand.
So, are we in a financial
Sometimes,
crisis? And are we in a financial crisis? And what are a few of the salient emerging stories that indicate that?
No, we're not yet.
Okay.
We're on a potential economic crisis because, and I'll tell you this from what I heard.
What's the distinction again? I'm vague on the distinction.
Well, an economic crisis, you can see an economic slowdown. The financial crisis will come after when you find out who's over leveraged and borrowed, and the banks start pulling back but we're not there yet. We're not there yet. The Fed thinks that they're getting out ahead of it. Lower rates aren't going to matter because the banks aren't going to lend to them anyway. Banks are going to start calling loans in. And now, the one thing that exists out there that's festering, and don't think that Putin doesn't know this for a minute, is and I know you guys are aware of it, is the amount of loans outstanding in the Permian and in the San Juan Basin and the Bakken. All the frackers have huge debt, and it's coming due. It's coming due. And don't think that some of this is not about that they want to squeeze. I think the Saudis were in favor of it, but it went too far, and now they're worried about themselves. It's amazing how we're not talking about Aramco right now, are we? No, that's off the table. Gee, can I have some of that? Yes, sir. But the world is far more logical when you step back and get away from the hysteria, that there are things going out there that are pointed at very vulnerable spots. And old Vladdy, he sees the world and its vulnerabilities. Everybody says, Russia's weak. Yeah, Russia is weak in some regard, but Russia has the ability to create havoc in many different areas. So this is part of that answer. We're not in any type of financial crisis yet. What you are is that people are fearful, and that's the outcome that we talked about, and we've talked about this, the demand shock. And I've argued with Rosenberg. Bookfire and I agreed. He just thought the supply shock would come first and then the demand shock. And Jimmy Bianco, I think, really felt the same thing. And then that piece I did with Lacey Hunt, Lacey Hunt, people should go back and listen to that podcast because he's one of the premier people on debt and understanding debt and where we lie. It could morph into that, which is what I was always afraid of, because if you really get into a global slowdown. And it is interesting because when you listen to the CNBC crowd, they always talk about how the strength of the consumer. I'm not buying. And that's where the demand shock will come in, because layoffs, you won't see it from today's unemployment number. But if people are worried about losing their jobs, that consumer is not going to appear as healthy as they've been trying to spin it for all this time. So that's one of the critical areas I'm actually watching.
Is gold signaling anything here right now?
Gold signaling that what I have always maintained is that are the central banks on the verge of losing control. When I say that, meaning that people have stopped thinking they have any credibility at all. And again, we're in a fiat currency world. So when they give you the comparisons to the 30s, even all the way up to Bretton Woods, at least there was something that stood behind the dollar, the world's reserve currency. There was, which is why we had to leave the Bretton Woods, because the U.S. liabilities grew way too large to be supported by any type of gold exchange standard. Now, I didn't call it the gold standard, the gold exchange standard, and that's Jacques Rueff, famous book, The Monetary Sin of the West, and he talks about it, why the French were busy pushing it. So the gold has really performed to me in the way it's supposed to. That people are nervous. I'm going to take some of that out. Now, it is interesting, as Mike Temple has warned all my blog readers, the gold miners have really underperformed there. And yet with gold up to this price, the earnings are going to be enormous, and they're going to have room to raise dividends.
They're also biggest input cost is energy, I think, and look at that.
Yeah, and it's dropped dramatically, you know. So yes, it all plays to them. We'll see. But the world is concentrating on the metal itself. Not everybody can go crowding into that same metal unless they're going to push it up to, you know, some of the levels that some of the black helicopter crowd has been singing about for a long time. And, you know, maybe it will. But gold is, I think, performing its absolute role here, which is, hey, I'm not wild about the credibility of the world's central banks. That's all. And that's what I've always maintained. Not inflation. Inflation will come well after that. It's about the credibility of central banks in a fiat currency world.
And they can't, you know, this isn't it's a financialized world that's going into a financial crisis, but the cause of the crisis is a virus, and that's forcing an economic slowdown. So more cheap money is almost not a policy option at all. So what do they have?
They have nothing. And you know what? And that's what they say. Why would you do it? It's not an effect. But that's when I draw down again. What are they trying to affect? You got to step back and say, what are they trying to affect? They're not trying to support the stock market. That's Kudlow's nonsense. It's about the dollar. It's about the dollar. And there is a history of them doing this. Listen, I go back to the Plaza Accord, but even the Plaza Accord was different because it still took place when the United States had a dominant position with the containment policy against the USSR. You know, don't forget, the Soviet Union still existed. Soviet Union's gone. The world has taken a far different shape. And again, that's why I brought up the issue with what Japan did. And you can look at it. Judd, put up the damn, you know, for everybody who doesn't see it, put up the U.S. dollar yen. Put it up in yen futures. Go back to October of 2012.
All right, hang on a second.
I mean, you could see it.
All right, there's right there's the bottom of the Plaza Accord. It's 37.94 in the yen.
Okay, and that's now go back to October of 2012, when the IMF had that meeting, and the Japanese and Chinese agreed to buy the Euro Stability Mechanism bonds, which really relieved all the pressure. Because what people don't understand, when the Greek crisis started in 2009, the Chinese pulled the plug on buying Greek bonds, which set everything in motion, by the way, as far as what was derisively called the pigs: Portugal, Ireland, Italy, Greece, and Spain. But when the Chinese backed away from buying, from taking any part of a Greek auction, everything started cascading. But if you look at October of 2012, look at the movement over the following 2 years in the yen.
Yeah. Went down to 78 again, 78, whatever it was, 79.
When I wrote that blog, that was a Sunday night. On Monday morning, the first call I made was to Frankie, who was still working on the floor. And the first thing we did was buy 200 yen puts.
Nice.
We bought 125 puts for December. You know, it was low volatility. You see, up until that point, the yen was sitting at close to its all-time highs, and of course, you know, when the price doubled, I got out. That was another one of my brilliant trades, which didn't take long because you could see the movement was dramatic. Believe me, if I called up Frankie right now, who's in retirement, he'd still laugh about it.
Well, this was the other one back here in 98 when the Fed intervened, when everybody was long dollar yen at 130, 135.
Yeah, I'll walk you through that. That was June, And I can tell you that one too. See, that's a good one. I'm glad you brought that up, because what happened then, Bob Rubin made a speech in the first week of June about how the U.S. supports a strong dollar and with everything else going on around it. Then Bill Clinton was going to China in the second or third week, and all of a sudden the Fed shows up and intervenes to strengthen the yen because Bill Clinton was going to Beijing, 1998, June of 1998, and the Chinese were really upset about the weakness in the yen. And the Fed, well, the Treasury instructs the Fed to intervene, and they intervene, and you get a little break in the yen for a couple of weeks. Then the yen starts to rally back. But then in October of 98, I'm not even looking at a chart. I know this so well. That was another one of those moments. And then the yen, because they again intervened because the Chinese were very unhappy about the weakness in the yen. It was really disrupting some stuff in Asia, and you know, the Japanese are not fond of the Clintons, because Bill Clinton went to, I believe he went to Beijing for 6 or 7 days, or to China. He toured China and never made a stop in Tokyo. And that came right home after that. And the Japanese were always upset about that. So it's good you brought that up. And that points to the difference of the world, especially from the Plaza Accord on. Not all these things are the same. That's why I thought that FT article was absolutely off base. They wrote a long article about it. Oh, how it's always, you know, coordinated, and, you know, they do it in conjunction. Well, not necessarily. The coordination is, here's what we're doing. And so, like when Vince Reinhardt was talking about it, if the United States says, this is what we're doing, what are you going to stop them? And you're not going to get into a beggar thy neighbor with them. You are not. Because you know what? They fear Trump's ability for tariffs. And a beggar thy neighbor on a currency depreciation would set in motion this White House into tariffs. And then you would be doing the 1930s redo, because that was the combination thereof. You just don't want to get that. So
yeah, Gru was at that World Bank deal with me, and Rich was long. He bought 2,500 yen futures that afternoon, and I flew home that night, and the Fed intervened. Well, Goldman bought 60,000 yen calls over the counter in London, and 2 minutes later, the Fed intervened. Yeah, 10 figures in a straight line.
Unbelievable, huh?
Oh yeah, how that works? Yeah, there's you know, nobody knows
Well,
anything.
Well, but even if they know, but that's why we pay attention. I don't have to know. It has to be revealed somewhere. Okay? It has to be. I tell you what, the Plaza Accord, I can tell you a story. I was playing golf with somebody the Friday before the Plaza Accord, somebody who I had a lot of respect for as a trader, and he respected my analytical ability. And we're on the golf course, and he says, you know, why is the yen higher? Because on that Friday, a U.S. trade number had come out, and it was a really good number. He said, the yen shouldn't be doing this. And from the golf course, you know, he says, give me your cell phone, because I have one of those early Motorola's. And he called, and he bought a lot of yen. He said, something's just not right here. So my point being is, if you're attentive, you can see these things, and they will tell you the story. It's out there. You can't hide from it.
No, somebody always knows.
Somebody always knows. And I don't care, because I know that's the history of the world, whether it's 100 years ago, 300 years ago, 500 years ago, 100 days ago. You know, it's what they proverbially call the smart money. But if you pay attention, it has to show itself. The greed factor demands it.
Yeah, all those are so screwed. Moore, FX Concepts, Connolly, the whole crowd. They were just all dollar yen and telling Bergstrom that it was going to 140 or 150. And that was, I asked him straight up. I was sitting next to him. I said, "What's your route?" So I looked at the cycle sheet and I said, "What's your route?" He goes, "I don't have an out." I go, 117, no response. 105, no response. Yeah, well, it didn't pause very long.
Yeah, these guys are just texting me about European bank stock. Let's take a look what's going on. These guys are pretty good. Let's see what they have to say. European bank stock. Oh, that's a lovely chart.
Which one?
European bank stocks. They just sent it to me.
Oh, that's the futures.
Oh man.
Something else.
No, it's the price stock in euros. Let's see what that symbol is. I can't tell, but they're just sending me the chart. It's closing below the 200-day moving average. I don't know. God, this is 200-week moving average. Forget 200-day. Wow. Euro stocks banks. It's the Euro stocks index in euros. So, wow. That's just the high was made on March 8th. I'm going back up for the last 3 years at 132, and right now we're trading 74. Hold on, let me see what else they sent me.
Yeah, I have to look those symbols up. If you give them to me, I'll pull them up.
Yeah, I don't know. Sorry. So, I mean, I think we went through everything. Again, we'll watch the dollar here. I think we're at some interesting levels, and it's been, how much is the euro up for the week? 400 ticks? Let's see.
Yeah, and geez, what was the low? Plaza cord fib.
Yeah, I know you put that out. So,
yeah, that's where it's just hanging up and people.
Again.
Yeah.
Again, it pays to do the work because this was prep. So off of the previous week's low, last week's low was 108.19. I'm looking at the futures, and we're up 500 ticks off that low.
Yeah, there's the Plaza cord fib right there, guys. And it just stalled there for a few days. And now it's trying to put an ORH. It got the stops yesterday on the ORH quarterly buy stops to the next macro levels.
And I'm telling you, you know what? And this is the value of this room. How many times do I have to say it? This is not done with, we're not looking at this in hindsight. No way, no how. This was actually Tuesday's conversation. And I'm not trying to pour salt in wounds or if anybody miss it, but that's the experience of this room. You know, I could sit and watch all kinds of people tell me, you know, after the fact, all the things that happened, but that's not this one. Sorry.
No,
this is real time. Oh, hold on 1 second.
Yeah, you know, and we were talking about that move in '98. You know, I think.
Hello.
Yeah, go ahead.
I'm gonna hang up soon, but I'm gonna tell you something you better be aware of.
Okay.
Quest Labs and LabCorp on Monday will be out with a lot of testing kits. They're both, so this is good capitalism because they're trying to chase the money. But what that'll mean is we'll probably see a proliferation in announced cases, but it should result in the lethality of this to drop dramatically, like you're seeing in South Korea. South Korea, because they're testing, they have a proliferation of testing, they've had an increase in cases, but the deaths haven't gone up. So they're down to like 0.6, 0.6% lethal rate versus, you know, the almost 3% in China. And that's because you've just changed the number so dramatically with the testing. So now, you know, then that becomes, the lethality is going to decline. So watch for that in the United States, okay? I'm just telling you.
Okay.
This is not anything, it's out there, okay? Somebody just, you know, put it to me. So, the issue for us is, how is this going to impact the market? Are people going to get giddy about, well, you know, it's not as lethal? Because right now you see the numbers in Washington State, those are just scary. But you are going to see a proliferation of cases because the amount of, you know, because test kits are going to become widely available.
All right.
Right?
Yeah, thanks. It's a good heads up.
And that's all I got.
Well, that's a lot.
All right. Thanks, Ira.
And we'll watch again these yield. I'm telling you, get your focus on the currencies and the interest rates for the next. I think there'll be, if you're patient, and this week I've been very patient, so I'm going to applaud my. You know, nobody's harder on me than me. I think the opportunities for, if you're patient and prepared in those markets, are going to be phenomenal.
Well, what's the next opportunity you're looking for?
I'm looking at these curves because we're getting some flattening today. In fact, I just got an email asking me about it because somebody has had them on, and today's not been a good day for, you know, and everybody wants every day to be a home run. And this should be steepening, because you have to ask yourself, who the hell is buying this crap? Who's buying it? And I'm telling you, the 10-year U.S. Treasury, you can sell me all you want about Haven, at 70 basis points, it's crap. It's crap. All right, I'm going to take this call. Thanks, guys. I'll talk to you.
Thanks, Ira.
All right, thanks. Bye.
All right.